I'm trying to live until I die. Come connect, you know it's a lewd state of mind. Yeah, yeah. Talking traveling, if you wanna fly. Fitness and finance, living a better life. Keep it raw, no filter. Living with no limit. Thank you for tuning in. Come on, let's get it.
We good? We on?
Yeah, we're good.
Ready to go. Gentlemen, welcome back to Lewd State of Mind.
Thank you.
Thanks for having us.
Cheers, guys.
Cheers. Buckfast.
You guys have been waiting for the Buckfast, haven't you?
Yes.
Is that the only reason you guys came back?
Yeah. And to check out the new studio.
Nick and Ted from Rate 1, what do you think about the new studio? Well, we made a few mods since you guys were here last, which was July last year, wasn't it?
Yep.
Yeah, it's cosy, intimate. It's an improvement. Yeah, it's great.
Great. That's what we want to hear, man. That's what we want to hear. What has been happening with you guys? What has been happening? Because obviously you've been watching the news. We didn't get an interest rate cut last month. Mm-hmm. The RBA said, well, there was a 97% chance that they were going to cut. They didn't cut. Everybody was surprised.
Yep.
I think they were just waiting on some inflation data.
Yep.
But there's hopefully another cut due this
A few weeks.
coming month. Yeah. So are we all hoping that's going to happen? And if that does happen, what does it mean for you guys?
Oh, the phones are ringing, so it's the anticipation is there. So everyone's getting a bit more positive. So
Has it been flat for a long time?
not for us. We've been pretty busy. It's like there's always activity. Before it was refinancing, now more positivity about looking to borrow and invest again, or buy a new home and upsize.
So what are the phone calls coming into you at the moment? What's the major workload for you?
Oh, the major one is people wanting to know what they can do with all this. So a lot of the media is all positive, and people thinking, oh, okay, what can I do? And then they call us, and how much can I borrow? If I sell this, what can I do? Or can I keep my home and buy a new home and start an investment portfolio, that sort of thing.
Okay, so more investing as opposed to getting a better dwelling?
A bit of both.
Bit of both?
The investment, I think, is slower than the homeowner one is more of the first home buyers that we talked about earlier.
We're getting a lot of those at the moment, well, especially myself. First home buyers now feeling like the last 3 years with all the schemes going in, it's slowly starting to, the news is spreading to a lot of the people, being able to get into their first home.
Okay, so
we're getting more of that.
What's the incentive there with the new home buyers at the moment? Like if I'm young, I've got a young wife, we want to buy our first home, we don't have a lot of money saved up. What do we do? How do we do it?
That's a good one, because the first home buyer guarantee, it was something that's been in the
since COVID.
Yeah, since COVID. So it's been there for a while, and they continuously every year for the 1st of July renew spots. They always say there's limited spots, but I haven't had it.
Yeah, they haven't run out.
Yeah, I haven't had it where they run out.
Is that a sales tactic?
Yeah.
Just to get people to get in?
I don't know if it's a sales tactic. But then in saying that, it's a low deposit. So traditionally, before this scheme came on, you're leaning on mum and dad to be able to use the equity in their parents' home. And when I say equity, just the value in their current home to be able to then borrow against.
The bank
if you
of
don't
mum
have
and
enough.
dad.
That's right.
Bank of mum and dad. That's exactly what that is, isn't
Well,
it?
the government scheme's almost identical to that, but you don't have to lean on mum and dad now.
Yeah.
So it's good for both mums and dads and the kids.
So what do you need? We need 5% to get in there? Yeah.
You still do? Yeah, 5%. And then also funds for stamp duty costs and conveyancing and purchase costs.
Or if they go over 600, if they're under 600, it's 5% because there's no stamp duty as well. That's another part of the government.
Oh, that's good. I didn't know about that.
Yeah.
And in between 600 to 750, there's a exemption. It's a tapered amount that they do, but it is an exemption, and you get discounts based on that that difference between 600 and 750 as a first home buyer.
Where's the threshold? What's the threshold?
750. 750 is
Oh,
the ceiling.
750, is
Yeah,
it?
yeah. And then after that,
over 750, you're paying same as a second home buyer.
What are you getting for 750 these days? Are you getting a house and land
further
package?
The house and land's getting expensive, but there's still areas
That's right.
of Melbourne you can buy a house for 750.
Yeah.
As you come in, you're starting looking at 3-bedroom, but down sort of in around Curram, Frankston,
Clyde. There's
out
still
the west.
Yeah, out the west.
North.
If it's southeast,
further north.
Yeah, if it's southeast Clyde, because Clyde still has land, and when you go to Clyde and then the south of Clyde, Pakenham, there's still a lot of land that they're actually starting to release and open up. So you can get those. I've got a client, it's a 3-bedroom home. He's buy something there around 600,000
For a 4-bedder?
for the house and land.
That's pretty good. Pretty good. I mean, most of these suburbs that are popping up have got good infrastructure as well too. They've got good supermarkets and fast food outlets.
A lot of traffic though.
Yeah, they have that, but maybe not the roads. They have that.
Well,
but there's one road in and out.
That's the downside of
that's
yeah,
it.
exactly.
Yeah,
Unfortunately, for a lot of people, that's all that they can afford. So
Yeah.
you know, so with the rate cut that we got in February, that was 0.25. What sort of help was that to an average mortgagee per week? What sort of dollar figure are we talking about?
Let's bring up a slide because I put a slide together. This is back in the May cut, and this happened.
So it's been two, one in Feb, one in May.
Yep. Yeah.
On the borrowing capacity
there
side,
was.
it added sort of 20, 30 grand each time, and on the repayment side, Nick's going to go through that shortly, I think.
Matt, we'll just go to the next. I think it was the next two slides from here. Yeah, that's when they changed it. But yeah, this is it. So this is based on loan size. So if you're it's segmented from 600, 750 to $1 million. This is for your home.
Yes.
So and this is sitting at an average rate 5.74 with 25 years left on the term. That's the difference per month as the change in the monthly repayments.
It give or take $1,000 a year, isn't it?
Yeah, that's right. Yeah.
Which makes a difference, doesn't it?
Yeah, that's right. Well, the two rate cuts now, you're looking at with an average loan size is 660 at the moment in Melbourne, Victoria. And then that's about $100. Oh, sorry, $200 now as a difference.
So the next rate cut that we're going to hopefully get in a couple of weeks, that's what, another $92 a month, or is that? Yeah, is that how that works?
That's right.
So you're going to be $180 better off.
Yeah.
The fixed rates are forecasting another one, so you could probably bank on another two over the next year or two.
Good. That's a good thing. And as you say, people, the market's buoyant. People are looking forward to maybe upgrading or investing, which is great.
I think it's a lot more coverage about loans and repayments and interest rates now that even the media talk about it, and the anticipation is making positivity without even rates moving. So especially last month, but people are more aware, I think, and maybe because they're tighter on their budget.
Well, they've had to be, haven't they? You know, over the course of the last 4
Cost of
years.
living,
yeah, exactly. And cost of living. It's it's. I as I said, we've talked about it previously. Imagine a family of 4 kids and one income and a nice big mortgage. I mean, there's been a lot of stress out there.
Private school.
Yeah, probably exactly.
Not yet.
We talked about that. Indeed.
Yeah.
So you guys are always busy. Most of the stuff that you do is we're talking about refinance or getting better rates. We talked about the rate cuts, and then you said that you guys can get better rates even after a rate cut. Is that? Am I correct in assuming that that's what you guys can do?
Yeah, that's right. Well, actually, it's got a home loan price inquiry. This was done in 2020 by the ACCC, which is the Australian Credit Consumer Conduct.
Yep.
And they did an inquiry to see what existing customers or new customers were getting, and then what existing customers on average is. And there's about a 50 basis points, which is 0.5% to 1% whole difference if you let your mortgage go for 5 years and you don't look at it. And there's been a huge difference during that period of time. And what that means is that what will happen is if you just take a home loan and you don't look at it at all and just pay the interest, over time, you're going to have a huge discrepancy between what new customers are getting and what you're getting, currently paying.
Of course, as you say, if it's 0.5%, it's $180, $200 a month.
Yeah, depending on the loan size. Yeah, that's right. And it's quite a bit as well.
Yeah, it all adds up, doesn't it?
Yeah, that's right. So even after the rate cut, what we'll be doing low, and we're getting a lot of calls for existing clients where generally if they're after 3-4 years, their interest rates are not as good as what new customers are getting. And we're doing a call and a request, and we've got a full-time staff member that's consistently just calling our existing clients.
Yeah, I got a phone call.
Yeah. And we're
Which is
seeing if we
brilliant.
can save you some money.
Yeah, it's brilliant.
That's it.
Unbelievable.
Some of the clients think it's a scam.
Oh, really?
Oh, you got to be careful.
Yeah,
but
that's
yeah,
right.
people ringing up and it wasn't the original broker. Okay.
Of course.
No, I'm not interested in a rate drop.
Yeah.
But yeah, if we go into the next slide, Matt, I think we put some numbers in some of the examples. So the one after that. Yeah, this is a good example with what we're seeing on a day-to-day basis, if an average loan size is about 660,000, and their current rates are, we're able to go for maybe existing negotiation just with the existing banks. So we're not refinancing, we're not changing banks.
We're just
calling
going
up the
back to the bank that
Yep.
that started the loan.
It doesn't need to be our client either.
Yep.
Oh, is that right?
Yeah. All we need is a home loan statement. We have the account number, we've
Yep.
got the balance, and we'll talk to the banks on your
They have
behalf and
an
negotiate.
online platform to fill it in, and often there's just a reduction.
Yeah.
Yeah. Well, because the bank doesn't want to lose a customer. They don't want you to refinance, do they?
At different times, they're more aggressive than
Yeah.
others, but certain banks are really aggressive, and others will let you go because they worked out the margins and the profit they make if they keep a lot of clients on a high rate and let a few go. So it's a bit hit and miss, but just give us a call and we can.
Is it the fact that they're making the most money out of any bank in the world that they just don't give a shit?
There's a bit of that.
Bit of
I'm
that?
sure there is.
Yeah.
But they're very smart. They do their numbers and they've
Yeah.
worked out. I think insurance is the same. If you don't check your insurances, premiums, you're probably paying too much, and then you ring them up occasionally and you'll get a better deal.
Because we discussed earlier that the Australian banks, the top 4 banks in Australia, are the most profitable banks in the world by return on equity. Does that surprise you?
No, well, that's probably why there's a bit of anti-bank sentiment. Bit jealousy of they making so much money and we're all struggling.
Yeah. Well, I did hear, and this is, we got to fact check this because I was speaking to someone from Canada and they were telling me that, or in the US, you get 30, if you sign up on a mortgage on today's date and that's at 2%, you get that 2% for 30 years.
Correct. I was going to bring that up because that was what I was comparing it to, where America fixed rate for the term of the loan, whereas here we're getting screwed. And as you say, sometimes they're not passing that rate cut on immediately, which sucks.
Yeah, our max is 5 years fixed pretty much.
That's right.
With most lenders.
Yeah. Yep.
And I would think our percentage of clients have fixed now, probably about 5%, if that. You're through COVID when rates were sort of 1 and 2 fixed rate. We did a lot. Most of I've got a handful of clients left still on the fixed rates that are in that 2 to 3% band, but majority have come off now. And you can fix it sort of close to 5 and variable sort of 5.5, 5 3/4. So you can take a lower fix, but with the anticipation, people aren't taking it.
Well, no, because as you say, we're hopefully going to get another
Correct,
couple of rate cuts. So you'd be silly to lock yourself down, would you?
Yeah.
You know, and unless you wanted that, as we said previously, you wanted that stability. You've got multiple properties, and you just want your spreadsheet to just look nice for the next 2 years, and not have to worry about it.
Yeah, that's right. Yeah.
Which is a good position to be in, I suppose.
But even a small 0.2% change in the rate, you
$1,300 a year. Wow.
Yeah, and this one we do with a phone call.
Yeah.
There's no paperwork generally, and you don't have to change banks.
And as we stipulated, they don't have to be a client of yours.
They don't have to be a client. Yeah, that's right.
That's the beauty of it. That's the beauty of it, isn't it?
Yeah, we're not taking all day to do it, so it doesn't cost us a lot of our time to do it either.
But it's what you guys do, which is awesome.
I think we get the benefit of being able to see 40 different banks' interest rates and being on top of that. And we're consistent, because we're doing this on a daily basis, we're consistently seeing what the banks are coming back to us at different variables of a loan. So we get to, negotiate and get to see, look, this XYZ bank is giving that interest rate for clients of that nature. Let's try and see if we can match it.
Yeah.
And that's that. And if you don't, then we can look at refinancing and then weigh up the costs on that. But yeah, generally there are quite a number of people that if they've got their loan there for more than 3-4 years, we can shave some points off that. And that also just saves time.
Yeah, so sorry to interrupt. I was going to say that if you can't get a better rate, the next step is refinancing. Is that correct? So refinancing
it's worth it,
has its ups and downs, obviously, because is there a cost associated with that?
Yeah.
Have we got any indication on what those costs are?
And depending, usually they're per property. If you've got multiple properties, there's multiple costs involved. I think in the next slide, Matt, we might have a little table just going through the costs. Yeah. And I've broken it down because you get stunned with how come it. So at the bottom there, it looks like it's about $1,000 of costs, and you're thinking, well, what does it all go towards? And we break it down to different things, and I'll explain it a little bit just because there are different layers to the costs, and if you've got multiple properties, it then adds in a little bit more as well.
So we start at the top. We're going to bank discharge discharge fee,
yeah.
which is basically them releasing you from that mortgage.
That's sort of their administration to do the paperwork.
Yeah.
So that's a bank fee. The
Yeah.
rest aren't bank fees.
Yeah,
Oh, they aren't bank fees.
yeah.
So the parties involved in it. So there's
That's right.
solicitors, government. So government takes quite a big hit.
So you get the mortgage deregistration, which is Victoria charge, 132,
So then they remove the mortgage,
and then they
from the title
reissue
back on,
it,
and then you
so
gotta
they
put
get
the new
another
bank up.
$132. Jesus.
They don't miss you.
Legal settlement document fee 200. So that's just legal jargon.
Lawyers
Somebody
to control
Yeah.
the settlement.
that's fair. That's fair enough.
Yeah.
What's a PEXA fee?
Yeah. So this is I don't know the
That's
exact
the
date.
platform now that they use to. They don't talk to each other.
exchange.
It's all done online.
Yeah.
Yeah, I can understand that. I don't like talking to people either.
yeah.
Not
You got to pay a
lawyers,
fee.
Get expensive.
Yeah. Well, you got to pay a fee every time you use it, and it transact on it. So when money
Oh, right.
exchanges
Yeah.
from one bank to another,
Yeah.
that's the fee that they use. or
That
that's the
seems
system
quite
that they
reasonable.
use.
Does that seem quite reasonable? Yeah.
Yeah, but it adds up still.
Yeah,
Adds
of
up.
course, of
Then
course.
they do a title search, and depending if you're changing different things, and sometimes those title searches, because it's $11 every time, so they'll do one before it settles and then do one after it settles. They're just trying to get an
Yeah.
understanding. But then there's times I've seen where they've got to do it 3-4 times because someone's pressed the button accidentally too much or whatever
shit.
happens. So
And then
sometimes,
the-
sometimes that happens like that.
And then you got the new bank establishment fee, which
Yeah.
is basically setting it up on their system.
Yeah, it depends on which bank. So we have it between 0 to 350,
Yeah.
but it just depends on the bank.
Yeah.
But yeah. Ultimately, it will cost you about $1,000.
That's why sometimes we can get a better deal, but it's not worth the switch sometimes.
Yeah. Yeah. Well, as you said, if, what do we say, 0.25 was about $1,300 a year
Yep.
compared to $1,000 or $1,300 to switch.
So you might be better off after 1 year.
Yeah.
Of course.
Yeah.
Yeah, exactly.
That's right.
Well, it's all about numbers and
And
dollars
there's
and
a
cents,
couple of
isn't it?
banks still with a cash back, which sort of covers that cost and gives you a little bit in your pocket. But
Because they were doing that. They were doing that a lot around COVID, weren't they? Just
They were hot on. Every
incentives.
bank was doing it. $4,000, $3,000.
That's a lot of money.
Sometimes per property. Now they've cut it back to, we've got one at 3, one at
Yeah.
2.
Yep.
But yeah, only a couple of lenders now.
Yeah.
Yeah.
They're not the top four.
They're competitive, but they're not the cheapest. So you got to weigh whether you want a cheap rate or do you want someone to help you with a changeover.
Yeah.
Yeah.
If it's probably the term you're looking at. If you're looking short term, you take the cash back. If you're looking medium to long, you go with the lower rate.
Yeah, of course, of course. And the other thing we're talking about with the market being sort of buoyant or starting to fizz, people are going to be looking at properties or adding properties. Maybe somebody's going from an existing home to a new home. They're going to need maybe some bridging finance from, because you've got to sell your home and then you've got to buy
That's right.
the new home.
Yeah.
And there's sometimes a bridge that needs to be sort of taken care of, and that's what bridging finance is.
And that's a lot of the calls. It's just people ringing up to find out how does it work. We're involved as people doing the finance, and there's agents involved in working out what properties are worth. So it's a lot of sort of prep for that transition to a new home, and whether they keep the home or have to sell it, and they need to bridge that period of time if they can't afford it. That they have 2 loans and 2 houses until they buy, move out, and then they can sell.
Yeah. So is there an average time for a bridge? Is it 3-6
Although
months?
banks have a 12-month period where they want you to have bought and sold.
Done it.
But often you'll do it quicker because
Yeah.
it's quite expensive if you hang on to a
Of course.
bridging loan for a while.
Yeah.
Yeah.
Yeah, because you're paying two
Two
mortgages.
loans.
Correct.
Yeah.
You pay interest on that, and the way they calculate it is more that you buy first, you settle, you move in, and then you've still got your home to then look at selling. So then just during that time, when you buy the home that you're moving into, because all your cash is tied into your property, you've got to get the whole loan for the whole thing.
Yeah.
And you're paying interest on all of it
Exactly.
and your current mortgage too.
Yeah.
Yeah.
Our recommendation is normally to sell first.
Yeah.
Yeah, go rent somewhere for a little bit.
But everyone wants to move into the home and then they don't want to live in the home while they're selling it, which I get it. But
Yeah.
when you do the numbers, it's often better to sell first.
Yeah.
Well, people,
And less risk.
people just get the I wanters though, don't they? Yeah.
Yeah.
Well, we're trying to put a presentation together soon on the cost of it, and then it helps people change their mind from, oh, it'd be great to buy a home, move in, and then we'll sell.
Yeah.
But we'll do the numbers and say, well, you can do that, but it's going to cost you $30,000. Oh, okay. Oh, we'll sell first then.
Yeah, for sure. Well, it's like having a property that's not tenanted, isn't it?
Yeah.
You've still got a mortgage that you're covering, but nobody's.
Yeah, it adds up.
Yeah, indeed.
Yeah.
And as you say, it's 3 months. It's at what $4,000 a month on the average. So the average the average loan we're saying is about 660 at the average mortgage,
Give or take,
Yeah, give
which
or
is
take.
about 35,
yeah, 3.5 to 4
37
grand,
Yep,
per month.
per month.
per month. Yep.
Okay, and if you haven't got that stashed away, it's a lot of money to find, isn't it?
Yeah.
Yeah.
And even in the way the banks do the bridging loans, just because they've got to rely on you selling your place in 12 months to be able to pay off the bridging portion of that loan, they put in a lot of buffers in place. So what would happen is that the cash that you'll get from selling, or the value that you get from selling your home eventually up to 12 months, they've got to put in all these buffers in place just in case you don't sell for that price.
Of course.
So then through a bridging loan, generally you buy for something less than what you can actually buy for.
Okay, yeah. So we're saying it doesn't make sense. Is that what we're saying?
In a perfect world, you wouldn't do it.
You wouldn't do it.
Yeah.
But if you're not worried about costs and you want the easiest move, it'd be buy, move in, and then sell. But there's a price to pay.
So did you guys? We didn't talk about this prior. Do you have any understanding about the total value of property, residential property in Australia?
I'd be guessing, but
What do you reckon?
I said trillions, but
Trillions?
Yeah.
So 11 trillion.
a lot of trillions.
A lot of
Yeah,
trillions.
a lot of trillions.
11.366 trillion.
Wow.
That was in the March quarter of 2025. And we were talking about approximately 66% of Australian households own their homes either with or without a mortgage, while 31% rent their homes. So,
Well, that's the stuff on the news now around that the government trying to promote building and wanting to build. What was the number of houses they want to build?
Oh yeah. It was 100,000 something per year.
I think it was more than
120.
that, wasn't it? They had to build 1 million homes in
Oh,
the
yeah,
year,
within
something
a
like
certain-
for the country.
Yeah.
And they're way below target, and that's probably saying that 66 is going down and the 30 odds is climbing,
yeah.
unless they build more. Just out of reach for too many.
Yeah.
Well, it
gotta go
is
far.
getting
Build costs are just crazy.
It is getting more and more out of reach, isn't it? You know, so these schemes like the first home buyer scheme are getting better and hopefully helping more people get into the market.
Yep.
But the other thing we were talking about obviously was people investing in the market. You know, once you've got equity and you've got capital and you've got a foothold in the market, it is easier. But the average household who's got one property, one dwelling, and they live in it, they've got a $500,000 or $600,000 mortgage. They're not doing anything other than paying their mortgage.
Yeah, their
they're
borrowing
not
capacity to buy good property's pretty hard now. 'Cause
they're not looking
yeah.
forward, because that's the thing is like, you know, what I hate seeing in the news is, there's a young guy that worked at Woolworths stacking shelves and now he's got 4 properties. He's worth $5 million. Well, you know, maybe he
You
has.
do see those headlines, do you?
Yeah, it pisses me off because people see this and it gives them a false sort of sense of security that anybody can do it. It's we talked about it. He's probably got $4 million in debt.
He probably took a lot of risks too along the way.
Yeah.
People
Everything's
count on.
negative geared, and he's probably living on the bones of his ass because he's having to cover those mortgages.
Or he was at the start. Maybe he's okay now. But
Yeah,
he took a lot of
but
risk
that's the
and-
thing is like that gap between the start and being okay, which is where your property increases in value, where the equity goes up in it. That's the thing is that you've still got to cover the mortgage on it. That's the thing. That's what they don't understand. The mortgage is there. It's a monthly payment. Sure, the value of the property's gone up, all right?
Well, that's important,
But
Mark.
it's
If
not
it's
money-
not moving up,
Yeah.
your holding costs are high, and Melbourne hasn't moved for 5 years. If you'd gone in Brisbane and Perth, you've done well, but and maybe Melbourne's term now, who knows?
Well, that's what we were talking about earlier also about unit prices and stuff. That doesn't make any sense to buy a unit and hopefully it's going to go up by an exponential amount within 5 to 10 years. It's just not going to happen. It hasn't happened. And
Definitely not apartments.
No, that's what I'm
Possibly
talking about,
units
apartments.
with some
Like,
land.
yeah, townhouses is a little bit different. But apartments, no. And then when you do the numbers on it, you're paying body corporate fees and you actually, you're not making any money at all over the course of the period.
Yeah, that's right.
Which a lot of people wouldn't know about. They go, I've got my own apartment, it's in the city and everything's
And it's
awesome.
nice.
Yeah,
and it's
yeah.
nice and it's convenient, you know, and it's new and it's got all the mod counts, but it's not a good financial tell me I'm wrong. It's not a good financial decision if you want
To get ahead.
to get ahead.
Yeah,
Exactly.
yeah.
For you to exist,
Lifestyle, yeah.
Yeah, definitely. Yeah. I think the lifestyle with apartments is, and I think we might have
You
talked
can
about this.
speak from
Yeah, yeah,
experience
because and I now live in an apartment, and this is a place that's close to home, close to family, close to work, and the lifestyle is great.
Yeah.
The other thing is, I find, I mean, we've always, like my mum's house, and this is a suburb in the southeast, and we've never really had crime in that for many, many years. I've lived there for 25 years. 25 years. We've never had crime, and now you've got people breaking into homes in areas that there never had been robberies and crimes and youth crimes before. So in the apartment, we've got underground garage and everything's secured. There's cameras everywhere. I feel a lot safer that way than it is there. But it definitely is a lifestyle choice. It probably won't grow. Down the road, every 2 years, you've got another 20 stories of apartments coming up. You know, every 2-3 years.
Yep.
So that floods, and property prices all based on supply and demand. And the more supply comes out, and the supply comes in a windfall, there's 300 apartments just all of a sudden, and the supply increases, and the demand's not always there to catch up onto it, and you have stable properties and apartments, and even sometimes apartments coming down in value because it's just an influx of supply.
And
in
just
that
so our
area.
listeners know, we're talking about the Melbourne market. So we're based here in Melbourne, just so they understand.
There'll be
This is
pockets
where
in
it-
every city, I'd imagine.
Of course, but
Yeah.
we're specifically talking about Melbourne.
Well, I know in Sydney, unit prices and apartments go up. They do go up, and it's just because
There's not as many.
there's not many.
In
Yeah,
Brisbane
that's
as well.
right.
I think Brisbane units and apartments done okay.
Yeah.
But and maybe not so much Gold Coast, but they've done better than Melbourne. 'Cause
Yeah, but Melbourne,
high
as you
supply.
say, there's a lot of stock.
Yeah.
A lot of stock
That's
out
right.
there, and there's more buildings going up and
Yeah.
up and up.
Yeah, that's
Well,
right.
the government's pushing it because they want to stop the urban sprawl. But
Yeah.
if
Is
your investment, you're not getting that still. Still
Is the urban sprawl a bad thing though?
depends.
The traffic.
If you're environmentalist, yeah, definitely. And if you
If we think about it, if you don't want to live in the city, which a lot of people don't want to do, they want to be in a nice suburb that's got a train line, they've got a nice school, they've got a shopping centre, you know, they've got all these you know, luxuries, all these just stuff that should be afforded to you in these areas. Why wouldn't you want to live there?
Well, that's where COVID's helped change people's attitudes towards that because they can live further out and they still work from home 2 days, work from the office 3, have good setups like this to work, good internet, and they don't need to be near the city. But yes, it hasn't got as many amenities, and the traffic is better, but you've got to get in and out.
Yeah. Well, you say the traffic's going to get worse before it gets better, isn't it? It's something.
Yeah.
There's just too many people in the world.
Well, they talk about migration now too, and
Yeah.
that people are saying cut it back, but it slows the economy down. So
Have we cut it back though? As Victoria, I can't remember. It's an Australian issue. It's not state by state, is it? Because immigration's run by the federal government.
Yep.
As to how many people come in, it's just up to them as to where they choose to go. You know, are you seeing a lot of immigrants coming to your door, going, "Hey, help us out with it"? You know,
I think they're still trying to encourage certain industries to come
Yeah.
over because we're short
Skilled
on
workers.
Yes,
of course.
tradespeople too. I think that you can get in. And the cost of a building is crazy. So
I've got a group of first-home clients that they've come from Southeast Asia as nurses, and they've come on a work skilled visa. They got their permanent residency within 3-4 months, and then they've bought their first home in a year of coming in here.
That's pretty cool.
Yeah.
That's pretty cool.
Yeah,
a bit more motivated.
yeah, a lot more motivated. And these are nurses. These are in the healthcare industries.
You got to take
So
your
then
hat
that
off to
helps.
those people, don't you?
Yeah, well, that obviously then increases the demand, and that's where a lot of people. Hence why there are certain areas, and it depends on the areas that they. But it's not that much to really move the dial on property prices. Keep going up. I've got a little. I think it might be in the next one, Matt, where we have a look for the housing market.
Ask for cashbacks. What was that about? Did we cover that? Did we cover the
Oh, that
cashbacks?
was on the refinance.
Yeah, that was
Yeah,
a
yeah.
refinance on the cashbacks.
So you want to be asked? That's the question you guys ask, or
Well,
is it just
it's-
knowing that it's not
On that
available?
pricing, we'd look at it. If it's good rate, you get offered by a bank, we'll keep it there. If it's not good, that's where you weigh up the shift, and then the shift questions are: do you want the best rate, or do you want a combination of a good rate and cashback?
Cashback. Yeah.
But then it all comes down to the numbers at the end of the day, even with the cashback. So, you know, we'll generally go through the numbers with you, whether it's an interest rate difference in that year, and then if is there an added bonus or the cashback, does that offset even slightly high interest rate.
Yeah, going ahead.
Yeah.
So what have we got here? We've got a scenario. We've got a buying the family home.
Yeah, so this one's just a scenario to see borrowing capacity, but I might actually let's talk
This is the
about
one
it.
we talk about?
Yeah, let's talk about it because this ties into what we'll talk about a little bit later down the track in terms of the housing market. And this one is just a simple example. You've got two adults there with two kids. They've got a car loan repayment, and then the credit card, I've crossed it out. So if they've closed the credit card. So one thing we might have mentioned, and we'll bring it back to this episode, is generally at the moment, every 1,000 on your credit limit changes about 5,000 on your borrowing capacity.
So
That's
credit
the
cards.
one. The
credit
one
cards.
That's the
comment.
easy one to play around with. Yeah.
That's the one comment we've had from all the episodes, and of course this is our fourth episode. People DMing going, I did not know that. I had no idea. So once
Buy
again,
now, pay later. So
Yeah.
Afterpay, zip pay, overdrafts, and credit cards. Yeah.
yeah. So we said, so just to reiterate, it's for every $1,000 you've got as a credit limit on your card, is
card, yep.
$7,000 less you can borrow.
Yeah,
Is
it's
that
about
correct?
5,000.
5,000.
Yeah.
So if you've got a 5,000 limit on your card, that's
25,000.
25,000 less. That's a lot of money.
Yeah.
And that could be the difference between that nice townhouse here and that shitty townhouse in the next block.
Yeah.
Makes a big difference,
Yeah,
man.
it does. It really does.
Another easy one that, like, when a client rings me up and I haven't got my computer in front of me, how much can I borrow? It's generally about 5 times annual income. So if you look at this sheet, without the car loan, 110 and 90, 200 grand, that would be closer to $1 million instead of 900.
Okay.
So about 5 times the annual
Yep.
is about what you can borrow. It starts to get more complicated when you've got other properties and rent and private school and kids and other things, car loans, credit loans, personal loans, but in general about 5 times.
So $1 million, to borrow $1 million, you're looking at,
Have combined income of 200.
200,000.
yeah, and what's your monthly payment?
About $6 grand.
Yeah.
$6 grand.
Yeah.
Fuck. It's insane, isn't it?
Per month.
It's a per month. It's like every month
Well,
for
during
the rest of your
COVID,
life.
when COVID it was 2%,
Yeah.
it was almost free. It's $20,000 a year to borrow $1 million. It's almost free.
Wow.
When you think about it, and that's when that huge demand through COVID.
Of course.
Yeah, that's right.
Those were the good old days, eh?
Yeah, there's a few people hanging on those fixed rates. There's not many left.
Do we need another pandemic or not? Is it going to help us or
Well, one other thing. So on that, I think next slide, isn't it?
Yeah.
If rates
the
go
next
down
slide.
like they're talking, you'll see every 0.25% that borrowing capacity goes up about 20 grand. So
Okay.
people can borrow another 20 next month, and then if it's another rate drop in 2-3 months' time, they'll have another 20 again.
so? Who's the lead? Who's the best option up there?
Yeah, different banks, different appetite to risk.
Yep.
You tend to find the ones at the very top will charge a higher rate, and that's,
Of course.
that's them saying, "Well, we'll take a risk on you, but you can pay for it."
Yeah.
And if you want the best rate, well, you can have less money.
Yeah.
Yeah.
And then there's banks up there that just become a little bit more stringent on they'll look through everything. So even though they might have good borrowing capacity and a really competitive interest rate, they'll get 3 months of your statements and look through all your expenses.
Yeah, see if you got Netflix or only. I was going to say OnlyFans, but OnlyFans, that would be a subscription, not the. If you're on OnlyFans, you're making money, so they look at.
Yeah, unless you're paying for it, that's right.
One thing that came out, I think only last week with NAB, but it came out a couple months ago with CBA. If you've got a HEX debt, so the government maybe a year or two ago said, hang on, you've got to start counting HEX debt because that's a deduction from your pay as a commitment, like a loan, which technically is a student loan. But with all the propaganda through the media that first home buyers are struggling, government is trying to say, we're going to help. So they put out, we're pushing to help. One was the government scheme with the low deposit scheme. The other one they're saying, pushing to the bank, saying, if they've got a HEX debt, help them out. And what they're doing is, and I don't technically agree with it, is they're giving more money if you've got HEX debt than if you didn't have HEX debt.
How does the mechanics of that work?
Well, they put a lower serviceability buffer. Instead of a 3%, they put a 1%. And and if you're paying off your HEX within a certain time, they can ignore it, which that one sort of makes sense. But the 1% buffer, I'm not totally agreeing with that one. But that's only come out. So CBA a few months ago. So helping first home buyers get in the market. It's just a couple of niches with a couple of banks. So you'd probably want to ring Nick on that one and get the details. But you can borrow more, and I think it's for some clients an extra 100,000 they can borrow if they've got a HEX debt. It's
Yeah.
That just
It depends on the income.
Yeah, exactly. That's crazy. That's crazy.
so. But the bank's taking advantage of the government rules or the government push to get more money out there for first home buyers. So they're saying, oh, we'll do this, and obviously got signed off.
Yep.
And now NAB have come on board with it last week. I would think more banks will follow.
Yeah, that one in particular is if you've got it's 20,000. If you've got 20,000 or less owing, they won't consider your HEX as a repayment on the mortgage application.
Yeah, but 20 grand for someone that on 80 grand a year might take
Take another
years to
five,
pay. Yeah, 'cause that-
10 years to pay down. Yeah.
maybe not that long, but yeah.
Yeah.
So, they got less pay.
Yeah.
Less money in the pocket. So
Yeah.
the old rules were technically right, but they're sort of trying to get more money out there.
Yeah.
And the banks don't mind that.
What have we got here, Nick? What's going on? Melbourne Metro medium sale price
Yeah,
for
so
houses.
This is we're going back in time when I think it might be the second podcast that we did this. So we showed this back in 2023.
Wow.
One. And this is the boom of COVID. We're talking just then about what happened during COVID. It was 2% rates.
199, 179.
Yeah.
Wow.
Yeah. And we go to the next slide, then there's unit prices on those figures. But this is 2023, good 2 years now, 2.5 years now. And then the next slide now blows it up to what it's been like for the last 2 years.
Can you explain exactly what I'm looking at?
Yeah. So the blue line is the medium house prices, and it's chunked up into quarterly points from 2020 quarter two all the way to 2025 or quarter two. So effectively the last 5 years
Hasn't moved.
of Melbourne house
Up and
prices.
down, but
Yeah.
slightly, but
Yeah.
we're back to where we were.
So we're saying that the market's just been flat, no growth.
Up and down, yeah, but
This-
overall, yeah.
Yeah.
This is the Melbourne market.
This is the Melbourne market now.
Okay.
Yeah.
How do we compare to other markets?
Well, Perth and Brisbane are the two that will be the biggest changes.
Yeah.
I think Sydney's been relatively flat.
Well, prior to this, Brisbane was, I think, a lot less.
Or they're
a lot lower.
they're higher median price than Melbourne now.
Yeah.
So
What's
Sydney,
the
then
median
Melbourne.
price at the moment?
So that's the
Was it
median price
nine-
there.
Was it 9?
Yeah, 924 is where it's at.
That includes houses
with
and
Melbourne.
So I was
I think it's at $1 million now with Brisbane.
to understand that the average median price across all markets is a million. It's hit $1 million.
It'd be close to that.
Yeah, it
Yeah.
would be. Yeah,
Sydney and Brisbane a bigger market.
that's right.
Of course.
Sydney
Yeah.
bigger market.
Yeah, that's right. And you can see the reality of the supply and demand is during that, it's good to see that there is still the demand in Melbourne house prices or Melbourne house owners looking to buy into their houses and, potentially keeping the difference between the supply and demand quite even, hence why it's been flatlining like that. We've known a lot of investors pulling out of the Melbourne market, so selling their investment properties out of Melbourne to go invest upstate or in Perth over the last 2 to 3 years.
And why is that?
There's high returns, high demands up in the Brisbane market.
Or capital growth. Yeah, they're expecting
Capital growth.
and it has been good capital growth.
Oh, of course. It's not
Cities.
just stuff like land taxes and bits and
I
pieces.
think-
Although
A little bit of that
I
as
think
well.
it's at the back
yeah.
of people's mind.
Yeah.
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 I think we talked last podcast that
Yeah.
they've still got the land taxes there. Maybe the
Yeah,
thresholds
that's right.
are lower, but
Yeah. Well, their insurances are through the roof.
Who's
Brisbane,
Queensland.
Queensland insurances.
more natural.
Yeah.
Just
disasters.
natural.
You got home insurances at $4,000 per year.
Whoa.
Yeah, it's like, yeah. So then that offsets kind of the land tax that we're paying in Melbourne here.
Yeah.
But yeah, there's certain properties in certain areas. I wouldn't say for all of it, but there are certain properties that you're paying $4,000, $4,000 to $5,000.
So they're really when you're doing the crunching of the numbers for buying a house anywhere, you've got all these factors that need to be considered. And like as you say, with Queensland, the insurance costs, which are an annual cost, which you've got to calculate for. I mean, I think there's a lot of people that sort of go blindly into these things, going, "Oh, well, I've only got my mortgage. What's my mortgage payment?" And then I'm happy with that. And there's a lot to consider when you're crunching the numbers for buying a house, and one of those, as we talked about, is insurances.
But I think historically people just wouldn't say got lucky, but the sentiment is I'll buy a property will be okay, and over the years it has been, especially even in Brisbane and buying apartments. You've probably got in Gold Coast buying apartments, but now at times in Melbourne apartments people think the same thing and they've been caught out, and have 5 years of flat then you start to think about it, and costs being able to afford it, then people have cut back. So whether it's always going to be the best thing to do with your money, who knows? You want to start to think about other things as well, not just property all the time.
Yeah. Well, as you say,
Or unless you do your research and you're good at that.
yeah. There's a lot of things to consider, isn't there?
But people which got by just by buying property, and they were lucky.
Yeah.
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 Yeah. Are there any bargains to be had in the market these days? And we're talking specifically Melbourne.
I reckon if you're a handy person and can fix things up yourself or improve properties, you can.
Renovate. We're talking about
Yeah,
renovating.
'cause the cost of renovating a building, it's horrendous. But if you can do it yourself or got close contacts, you can. Because people don't want to touch that anymore because it's just too much. I know I wouldn't want to do it because I haven't got enough people to do it for me, or I'm not handy. So you steer away. And the people that do it, they pay through the nose. And then if you can get in and do it yourself and flip it and it's your home, that's where some people are making money.
Okay.
Because that's exempt from capital gains tax as well,
Oh, is it?
if it's your home. So some people are still flipping properties, but the cost of building, unless you do it yourself, is eroding those profits.
So if you buy a property, that's your family home,
And live in it,
you live in it,
Improve
renovate it,
Yeah.
and then you flip it,
that's all profit.
no capital gains.
We got your getting costs, which is stamp duty, and
Yeah.
your selling costs at the agent, about 7% between the two.
Okay.
Anything above that, you can keep, as long as it's your home.
So you're
Principal
not paying.
place
You're
of
not,
residence.
you're not paying tax. You're not paying capital
On the
gains
profit.
tax.
Yeah.
I did not know that. I did not know that. So, as you say, if you're a chippy or a sparky or whatever, you're handy with the tools.
Organised,
yep.
and you can turn it over quickly. Yeah.
Yep. Because that's the idea, isn't it? Get in, get out, make the money go on to the next one.
Yeah. That's
But
right.
you're not making the profits I'm making, 5-6 years ago.
Yeah,
'Cause
yeah, that's
that's
right.
pretty flat.
Yeah.
So
Oh,
you're
well.
getting only on the improvement.
Yeah.
So then you're relying on good workmanship and good area.
Of course.
So that's,
Once again, you got all these boxes to tick.
Yeah, that's right.
To hopefully make some money out of it, and that's where it gets complicated, isn't it?
And I think with all the different taxes that's been introduced,
indirect taxes. Yeah.
indirect taxes, it's not something that people think about that's a money making machine now. Whereas before it was, if you looked at just those quarters during COVID, you're really getting a growth of 200,000.
Unless you went to
just in
Brisbane or
that.
Perth.
Yeah, that's true.
Then
Yeah.
Then you would have been lucky,
Yeah.
happy.
Yeah.
Very happy.
Yeah.
Yeah, exactly.
Yeah.
Well, so what does the future hold? What do you reckon's on the horizon? Are we going to look at maybe a couple more rate cuts? Summer comes along, properties are on the market, prices are going up, and that hopefully leads into a new year where we're going to get more rate cuts. Or are we looking at 2 more rate cuts and then that's basically it? The RBA just wants things to settle down, to just simmer away, and hopefully the cost of living doesn't get.
I think they've shown that from last month, not dropping it, not wanting things to get out of control. But the 5-year fixed rates from all the banks are sort of low 5. So they're talking about, and the 2-3 year fixed rates are in that range. So they're sort of predicting that 'cause 2-3 years they're going to get down to 5 or close to it, low 5s. But the 5-year rates are pretty similar. So that's the forecast. It can change. I'm pretty positive about Melbourne and property prices. Not to go crazy, but that you're not going to lose money. One of our colleagues does a podcast, and it's quite interesting. He's talking about, because he's heavily involved in construction. And he said construction costs are so high now, it's pushing the prices up of established areas because it's more to buy land and build than it's to buy established.
Of course.
While that balance is not right, prices will have to climb up on established areas unless costs go down in building, which unlikely.
Well,
Maybe
that's
stop going up, but they won't. And so that's why I'm thinking it's still and being flat for 5 years. If you're going to buy and want to sell in a hurry, you're going to get lucky. But if you're going to buy a property in Melbourne and hang on to it, I think you're going to be okay.
Okay. Because there are some bargains to hit out there.
Yeah, the combination of fixed rates or the forecaster rates being fairly low, and the building industry and the established that balance, I think you'll be okay buying.
That's good.
Yeah, and with the anticipation with rates coming down, and we can see 0.25% changes your borrowing capacity or your purchasing power by 20,000 just before.
Yeah, that should force the price up by 20 grand.
It will flow into the market. Yeah, and that's what's been happening. And there's a little bit of an uptick if you're looking from Q4. It's not much, but yeah, that's the bounce back. So where we were lying about a year ago, median prices at 913,000, it stabilized and then came down in Q4. So this is around Q4 is probably 24. So it's probably early this year. And then you can see the slow uptick of about 25 grand there.
That's two rate rises.
With the rate rises,
Two rate
yeah.
drops, sorry.
Yeah.
You
Rate
put yourself
drops.
in the shoes of someone selling the house and you're the agent selling the house, that you might want to push your buy as high as they can. But if they can't borrow, they eventually have to stop. There'll be some that will push their limits. But if they can, the rates drop and they can borrow another 20 grand, they'll squeeze that 20 grand out. So that just naturally pushes prices up, the rate drop.
So technically, what we're saying right now is that this is the prime time to buy to get into the market because of the way the market is.
If you're looking medium
Prior-
long term, yeah.
Prior to another couple of rate cuts, which are going to push the prices up. Correct?
Yeah, correct.
Is that what I'm saying?
Correct, yeah.
Yeah.
And
Everyone
so,
will feel like they can afford more
Yeah.
in a couple of months.
Yeah.
yeah.
Because they
But they're still going to get the rate
right.
cut as well too,
Yeah.
which is the icing on the cake. Correct?
That's right.
Yeah.
Yeah.
I think we'll take a break. This podcast is brought to you by Holy Shirt Australia. Holy Shirt Australia are 100% online. They're Australia's largest no minimum custom print and embroidery company. All their services are completed in-house and they can deliver all orders promptly and professionally. They like to keep it simple and straightforward, so they offer cool stuff that can be custom printed or embroidered to your liking. They have an easy-to-use online designer to build your custom apparel from the comfort of your home or office. They offer pricing that reflects your individual order, and remember, they are no minimum on all their products. They deliver what the customer expects when they expect it. They've got over 1,500 products ready for you to custom print or embroider today, right now. So head to holyshirt.com.au for all your custom clothing requirements. All right, we're back after a short break. Old man had to go pee again, like normal. I don't have prostate cancer. I had a blood test. Hey, so since you guys were here last, we've got a little bit of a segment. It's called Dead or Alive. It's just to lighten the mood. You'll get the gist of what we're trying to get.
Yeah, okay.
All right. Sit back and relax and enjoy it.
Dumb ways to die. So many dumb ways to die. Dumb ways to die.
Do you recognise that song? Have you remember that?
No, I don't.
No, I remember it. The metro trains.
Yeah. My son used to sing it in the car. Yeah. You guys ever chopped down a tree before?
No.
You've never done that? You guys operated a chainsaw?
No.
No?
No, haven't done that.
You've never really?
Yeah, never done that. Oh,
I love it how these guys say they're basically saying, "Oh, I think that's where the tree's going to fall." You can see where this is going.
Are we going to guess where it's going to go?
Can you see where this is going?
The fact that you're showing it. They're screaming. Oh, no. Oh.
Oh shit! Is that house dead or alive?
They weren't even close.
The thing is, if you back that up, Matty, look at where it's leaning. If you go back to back.
Oh, that's a rope pulling
yeah,
it away.
they've got that rope there, and they're not even no one's holding it.
But the tree's leaning to the right already, isn't it? I mean, the rope's going to do fuck all.
Look at that rope.
That's why we don't chop trees.
Yeah.
No, what?
You get the pros in.
I was going to say, they obviously got the pros on the job there. What's next, Matty?
Wow.
That was a soft opening here. What's this guy doing?
Is this the thief?
You reckon? Looks like he's going to fucking steal something, doesn't he?
It's in the dark. You're not jet skiing in the dark.
Oh,
Saw him
yeah,
coming.
There we go. Yeah.
Ah, fuck! Oh, my fucking knee! Fuck! Oh! Oh, my fucking knee! Ah!
He's in the snow as well.
I wonder if he's got spikes at the bottom of that.
Yeah,
Oh,
I love it how when he first went in, the cricket stopped.
Scared him.
So for anybody that's listening, what the owner of this jet ski has done is basically set up a trap in the ground next to the jet ski to catch these would-be thieves, and he's fallen through.
Ooh.
I
wonder how big that drop is.
Yeah.
Geez, you want to hope they don't have spikes in that.
Yeah.
Like,
Well, you,
I can tell you what, there's nothing worse than a dirty thief. He got what he deserved. He did live, unfortunately. Fuck, that's funny. Can you replay as when he first went in?
We wait for how long the drop is.
Yeah. See the cricket stop?
yeah, it's funny that you picked up on the crickets.
There it goes.
That was back again. Oh, wow.
You reckon he's Australian?
It sounds like it, yeah.
Fucking knee, mate. Fuck. What do we got next,
He's up in
Matty?
Queensland.
What do we got next? Hold on a sec. Stop it right there. Stop, man.
Oh, wow.
Stop that.
He's obviously had a few drinks. You just wouldn't be doing it.
Just for those people that are listening, this guy's got a skyrocket stuck in his mouth. He's obviously got a beer in his hand. He didn't say, hold my beer to his mates. And he's lit it. What do you think he's trying to achieve here?
It's trying to be Daredevil.
There's no protection.
Yeah, that's what it is.
No protection, no eye goggles, no nothing. What do you think's
Good for
going to
his
happen?
socials.
Of course. Maddie, what do you think's going to happen to this clown?
I think he's going to lose his eyebrows.
Oh, maybe his teeth.
He's a ginger too. It's
Not a bad thing, yeah.
It's on fire.
oh.
Well, you get a back shot too.
Oh, Jesus Christ. Back that up, Maddie. Back that up. Look at
Oh, it's blowing his hair back too.
Jesus.
It'd be like a recall on a gun, you know.
That's
It's
just
in his throat.
I don't know what. So we had one previously where he shot it at his ass. But what the guy had is he had like a
Protection.
shield.
Oh, yeah, right.
Where the spray would shoot into his.
Hasn't thought this one through.
That's why I thought there was yeah. That's you know what that's called? That's called natural selection.
Yes.
And it's a ginger, so it's no love lost. what else
He's
have we
talking
got?
about his knee.
else
My fucking knee. My nose.
Oh, hold on a tick. Stop that right there, Matty.
Look where he's
What
standing.
is that?
What have we got here? So we've got the remnants of a log cabin, and somebody is on the inside of it
He's
with a
banging on the
hammer.
rooms. He's got a riff above him.
What country do you reckon this is in?
Canada. Alaska.
Listen for the Russian accent.
Oh,
There you
yeah,
go, man. What do you think's going to happen? What do you think's going to happen, Sunshine?
Все, пиздец.
Let's hit it there.
Прячься,
The wife told him
Серёжа.
where to stand.
Yeah. You reckon it's a set up from the wife?
Harder. What's she saying?
Oh, is she crying or laughing?
Oh, she's probably going, insurance.
That's the worst out of the lot.
That's dead. Oh, he died. Yeah, he died. She
No,
got
but
the
worst in terms of
she got the
what else
insurance.
could happen. He's standing there.
Yeah,
on the
I
inside.
know. It's so predictable. So you see what we're trying to achieve with this segment. This was actually quite light today.
Yeah.
Yeah, I didn't want to go too heavy considering the subject matter, but
Oh, wow.
yeah. That's one less Rusky in the world, unfortunately.
Yeah, that beam there looks pretty hefty.
That's insane. And so, well, hey guys, that's dead or alive. What do you reckon?
No, it's good. This is like watching the funniest Australian funniest home
Oh,
videos.
it's a little bit more extreme than
Yeah,
that.
yeah,
mate.
actually,
It's a little bit more extreme than that.
Yeah.
Take a lighter look. Hey,
It's good.
before we broke, we were going to discuss auctions. Now, auctioning your house is one option that you have. Is that correct?
Nerve-wracking one for everybody.
You reckon so? So explain to me the pros and cons of auctioning your house off.
Well, people are doing it, and the agents do it because it works. It gets good results, but it's just nerve-wracking for all. And I think where you're going with this is Nick's been doing a monthly seminar for buyers to talk about how it works, sort of, I think it's debunking some myths. You've got a flyer. You can probably show up on the screen.
Yeah.
But
Yeah. So how do we get in touch with that, with your seminar that you're doing? Is it on? It's online, or is it?
It's on my socials, my Instagram. I might put a link up on there, and we do one every month. It's down in the southeast of Melbourne, and at a.
So it's a face to face. It's not
Face-to-face.
virtual.
Yeah, no, not virtual. Sometimes we live stream, but the audio is about an hour and a half that we speak, and it's not always as clear when you do. We always recommend for you to come in and have it, and
And some
we have it
personalised
as-
questions
yeah,
too,
that's
so it's
right.
better face to
Yeah,
face.
and we have it as a Q&A session, and we deliberately want it to have more interactive, because the auction landscape, it can be, especially for first home buyers, people who don't go to auctions quite often. You've got agents. Yeah, you've got agents and auctioneers who's been doing it, 10 years. They know how to press and to really try and grab competition. And the idea of it is to really drive competition between 2 different, 3 different, 4 different buyers who obviously want that house. So, you've got the, I guess I'll, lack of a better word, the anxiety creeping in and the doubt creeping in. It's like, can we really, give this a shot? And a lot of people, before even they might have turned up to a few auctions just to have a look at it, and they would feel the anxiety creep in and the doubt creep in, and it is quite intense. You've got the auctioneer, driving the price, and then you've got the agents walking up to you asking you, you've got to put in a bit more. You really want the house, you've got to put in a bit more. So the idea of it is to really debunk some myths. On an outside perspective, going to an auction, you can see so much different things going on, and auctions generally last, the ones that really keep moving, they go between 15 to 20 minutes. It's not long.
There's a lot of moving parts, as you say, and if you've never been to an auction before, it can be pretty daunting, can't it?
Yeah, correct.
And the fear of the unknown is like, if you're going in blind, you're not going to have much success. Are you?
Correct. Yeah, that's the big one that people don't know what they're doing. They miss out, or don't bid, or they don't bid confidently enough. They're just not in the market until they work out how to do it. And so Nick's seminar, along with Daniel, it's fantastic. I've been to about 4 of them now. I think so. I've sent my buyers there now and say, just go along, learn a bit, get yourself educated to what to expect, and some strategies. He talks about that's quite interesting to hear it from the agent who's the auctioneer, and then Nick talks a bit about the finance and prepping for it. So if you're in that buying stage, I recommend it's free seminar. Some nibblies last time. There was even a competition they had. So I found it fantastic.
Yeah, and I think what really helps is the fact that, especially for people who aren't familiar with the whole auction process, just to get an understanding of what happens during the auction process and what happens throughout the auction as well. And
Deposits, bidding.
That's right.
Yeah, a lot of...
Yeah. And we've got an auction, and then the flip side to that is a private sale. And people generally prefer private sale because then they don't have to have that quick thinking and decision making on the spot, where you're emotionally invested and you've got the agents doing their thing, which is rightly so.
But not as transparent as an auction. From the buyer's point of view, they always doubt the agent that they're doing tricks, and sometimes they do. But the auction is, at least you can see it happening, and the bidders and who's actually making offers.
What's the percentage of auctions versus private sales? Do we know?
It depends on the area. So there are particular areas that are really good with auctions just because the demand is there for it. And
in a city, I would say it's 80%, 70%. I'm not sure the exact stats, but you could probably look it up.
Yeah.
But it's high in a city, and as you go out, it starts to taper off. But I'd say as far as Glen Waverley,
even towards
Wanturna,
Ferntree Gully,
head
they're
down
starting
south.
there.
Even I would say the peninsula had some auctions, but the further you go out, the generally less auctions.
So it's about supply and demand, yeah? Yeah?
I think it's about the number of buyers. They need to have enough buyers, but also the experience of the agents, I think. But I think in a good market, it's good for the vendor. You bring in the competition out, whereas private sale, people might be holding back because they don't know or they doubt the other offers.
Yeah, well, as you say, in an auction, it's all there in front of you.
If they want it, they got to bid. And
It's
they can see
transparent.
it.
This is the price. That's what you need. And as you say, the agents are going to come around and say, well, this is probably what you need to do, bump it up. Is that a common practice for the agents to go around spruiking and basically they're pumping tyres and trying to increase the price?
I think they're also helping because if they don't go to this Q&A, a lot of people get really hesitant at auction.
Of course.
They don't want to be in front of the crowd sticking their hand up. And if you've been to an auction yourself for a property you're buying, I don't know if you have, I've been to about 100 auctions, not for myself, but with agents and my buyers, and it's nerve wracking. And when it's not myself, it's okay. When you just go to an auction, you're not going to bid out. It's good fun, especially when you've got an entertaining auctioneer. But when it's your own property or you're buying, your heart is going.
Yeah.
No matter how experienced you are, and those agents are there to, I guess their job is to get the highest price, but they'll give you the confidence and push you a bit. And yeah, that does force the price up, but yeah.
And the other thing is that there are times, because it's going very quickly. You know, there's a bid here, and when you have an agent, and generally it's good to have an agent somewhere, or even someone to support you to even place bids for you, because you can imagine if you're in a high emotional state, you're probably not going to be doing things in a confidence level unless you're experienced in that environment. So one thing that Daniel's been an auctioneer for 10 years and he's been with the group for quite a while, and one thing that he's quite good at is being able to show energy as an auctioneer, but then also understand what that energy is coming from. And one of the big things, and Daniel talks about a lot of different things, but one of the things he says is to really have confidence when you're making bids, because everyone's there who are interested in the property will, and even myself, if I'm buying that property, will have doubt, and you just want to be able to manage your doubt, and the doubt is whether or not you can win at this auction, or whether or not you're going to be priced out, and whether or not you can be at a winning hand to be able to win that property. So everyone has that, and there were times towards, even though you might have a budget, you may not want to spend the whole budget, but you want to be also in a position where you want to put doubt in your competition's mind that you're going to get the house no matter what, and they can keep trying on bids.
Well, it's like poker, really, isn't it? Yeah.
There's an element of that, yeah. I mean, you don't always win, but yeah.
So what are the do's and don'ts of auctioning? I'm a buyer. I'm going to my first auction. I've been to your seminar. I've got a little bit of confidence. What shouldn't I do?
Yeah.
What shouldn't I do?
I think the things that you shouldn't do is I guess not be prepared. So
preparation.
Preparation is the biggest one, and hence why we have these.
So we're talking about knowing your borrowing capacity.
Yep.
What else?
So on a finance perspective, I might expand on that, because as we were looking before, we've got different lenders, and back on that table, we've got 40 different lenders there, and they range between a bank that's going to give you 500,000 all the way up to 900,000. So the biggest one is to really understand what is that maximum that you can go to that can give you the best chance to be able to win that property. And we're talking about, this is a dream home that you saw come on the market, and you really want this place.
Well, you're emotionally invested.
You're emotionally
of course.
invested, and this is your home.
That I would say that's a bad thing to do going into an auction, is be emotionally invested.
Well, that's if you're not prepared. You can go too far.
Yeah.
You get the I wanters,
Yeah.
and if you're not careful, you'll bid too high.
Yeah.
So, if I bid too high, are there any other fees up and above from what I've bid over my budget? Are there any other fees associated with the auction? Am I paying like a 10%? You know, at some auctions you've got a 10% seller fee or whatever. But what I'm saying is that, so the hammer falls down $575,000, sold to Mr. Gray.
Yep.
Is that all I'm paying? Or am I paying other fees on top of that auction price?
Well, you've got then the stamp duty and
Just the
purchase
government
costs.
costs, yeah.
Yeah, that's
So
the
just
only
those
thing
government
they have.
There's nothing over a standard house you
That's
buy
right.
privately.
Yeah.
Which you would know going into that from
Correct. Yeah.
your mortgage broker, saying, well, this is your maximum capacity. That includes your stamp duty, and this is all the money you've got to spend.
Yeah.
And you've got to be prepared going into an
Going
auction.
into that. Yeah, correct. And I guess the risk there, and the biggest thing is that no one ever wants to spend over the budget of what they can be able to buy for. Like it's always in the back of our minds, and especially if you're buying, so you're always going to have a price in mind. But then when there's competition, you then have to push on that budget. And one thing that we talk about is called a fighting fund, where even though you have a price that you're willing to pay, but then to be able to be prepared for just a little bit extra. We talk about, the interest rates coming down and an extra 20 grand in borrowing capacity, or then when you look at maybe can we cut down some costs over the next 3 months to really build up a little bit more, just so that when we get to the nth degree of this auction and you're going head to head with someone else and it's $500 bids, what are the different strategies to really knock them out?
Well, understanding
and
what your
secure
bids
it?
are worth. So every 10,000 is about $15 a week in terms of repayment.
Yeah, well,
And
once,
people miss out sometimes over small amounts. Now they should stop at a certain level, but if they say, well, I can go, I want to buy it for 800, but if it went to 820, I could do it. 830, it's at limit. But okay, 820, 830 is an extra $15 a week. If it's the right property and I really want it, and I need to go there, I'm going to push myself. But that's around preparation. Without it, you don't know that number, and you probably won't bid at all. You bid cheap, or you just wait to see if it passes in and see if you can get it. But go along.
Yeah.
And that question just had there is the type of questions that come out that night. There's normally 10 to 15 people there, and different questions and from different range of people. So it's I highly recommend it.
Yeah.
okay, so we know what not to do. I'm prepared. I've got everything I need. What should I do at my first auction? Am I making the first bid? Am I trying to get the last bid?
Yeah.
Where am I placing myself in this whole?
The last one,
Yeah,
definitely.
yeah,
if you want the
definitely.
property.
Yeah, you
So
definitely
of
want the
course,
last bit.
this
Yeah,
whole
yeah, yeah.
this whole travelling circus, which
Yeah.
is what it is.
That's right. One of the things, and I won't go through all of it because there's actually quite a lot, and Daniel does really well through the presentation where he's outlining all the different things that there's. So he talks about strategies on bidding strategies. Then he talks about myths on what things that people may be thinking and things that he's going to cut. But the biggest one that he actually does highly recommend is just to communicate with the agent that you're interested. So many times you find that you don't want to, like, let's say you're playing poker, you don't want to show all your hands, and you don't want to sound too keen or desperate so that they can try to get as much as they can. But communication, out of all, has actually been one of the biggest things and biggest takeaways, because so many times you're interested in this property, but you don't want to show too much interest. But then it could sell because someone else calls up the agent or communicates that this is their situation, this is what they're willing to go for. They're keeping things somewhat transparent with the agent and communicating, and it can just go. So the next day you might just miss out on the property because you decided that you'll wait. Auctions in 2 weeks, you're fine. You'll go to the property, but you'll hide away and not communicate. And then there are chances where the property sells, even though you love the property, and they'll sell before auction. Yeah.
Well, what you're saying makes perfect sense because you want to prepare yourself for a situation. You're making a big decision. It's probably one of the biggest decisions in your life that you're going to make. You want to be prepared for it. And a lot of people, as you say, if they're not prepared, they can go to these auctions, they can get outbid, they can get downtrodden and go, well, fuck, I'm not going to find the property they want, and maybe settle for something second best that they really didn't want.
Yep.
Because that's what's available to them.
That's
Because
right.
they haven't got these strategies.
Yeah, that's right.
The biggest thing I've seen I've had 2 or 3 of my clients go and give a couple of your own go, and they buy quite quickly because they go to the auction prepared, knowing what's happening, not scared, and they're just confident. And that bidding style often works better too. A confident bidder scares off the
Of course.
non-confident bidder. So
Correct.
just this thing doesn't force you to buy it, but just educates you, and then you become more comfortable around going to an auction, which in the southeast is quite common. And if you're not going to go to an auction, you're going to miss out on a lot of properties that go to auction because you're not bidding. So, yeah, it's great. Education, whether it's the next one you go to or one you go to in the future, I think it really helps.
Yeah. And generally the ones that do go to auction are highly sought after properties in good locations, great layouts of the home. It ticks a lot of boxes for the community that lives there already. So they know, and the agents know that. So then the agents will highly recommend to push forward for an auction to the vendors, just because they've got a few bidders that's going to be able to be there live bidding against each other.
Yeah.
Generally driving up the price.
Whereas you say that's the formula for an auction, isn't it? A good
Yeah,
property that a lot of people, it's sought after. And you're going to have 2, 3, 4 people fighting over it.
It
which
does
is gonna-
give certainty all parties too, because you've got a date the auction is, and
Yeah.
a general settlement date. So the agent knows when he's going to do the job. The vendor knows when it's going to sell, probably. What's the clearance rate? 70 odd
Yeah,
percent.
yeah, that's right.
I was going to ask you that. So 70% clearance rate.
I think
Is
it's
that-
around that.
Yeah.
Is that good?
That's good. I
think it got
there's
higher
a
through
stat.
COVID and
Yeah,
it dropped
that's
and it's
right.
picking back up again.
That's right. Yeah. I think before it hit 70, it was sitting around 50 to 60, and that's when you've got when properties just stay on the market for too long, it just means that the vendors are here and the buyers are here. They're just not meeting the ground, so properties don't sell.
Yeah.
And now that we're getting to a level where borrowing capacity has potentially
Confidence,
increased
yeah.
and the confidence have increased, and then the vendors are sitting on this property of wanting to sell for the last 2 years, finally thinking, all right, well, that's what I'm going to get. So a lot of the times we are at a point now where the people that have been trying to sell and thinking about a COVID price now realizing that, hey, we can't actually get that price anymore, and let's just move on with our life. 'Cause
Yeah.
The reason why they're selling is because they just want to close a chapter,
Yep.
start a new one, and they're now coming to terms that this is what it is. And with both of it, with the vendors coming down a little bit, buyers having that increase in borrowing, things are clearing.
The transparency is there for the vendor too. If he's got a high expectation,
Mm.
the market's there and they're saying, well, they're not bidding it. It tells you the price is not there. It's maybe back down here.
Mm.
So I think within reason, it's good for everyone.
For sure.
If you're, and for buyers, be prepared and confident
Yeah.
and understand how it works. Then because the agents know how it works and they may get the better out of it because they're good at it and
Yeah.
they do it all the time. So here we're trying to say to the buyers, you guys learn how it works too, so you can take advantage and be better for it.
Oh, it sounds amazing. As I said, we'll put the details up for
Yeah.
those seminars.
So we're doing it once a month. It's in Glenwaverley. That's the suburb that we do it the talk in, and it's close to where we work. We're in Mulgrave, so it's actually down the road. And the dates change each month just because of availability on our end, but we'll generally post it up on our socials, and if they want to reach out to you, they'll know how to get in contact.
Awesome. Hey, we talked about a house being passed in. Can you explain to our listeners the process of that happening and then what potentially will happen when that occurs?
Yeah, that's a really good question. So a house being passed in would mean that when we hold an auction, the agents and the real estate agency is selling a house, and they don't meet the reserve. So the reserve is the price that the vendor or the owner is willing to sell the property at. And in an auction, that reserve generally gets decided, a day before or on the day sometimes as well. So, a lot of people
And they can change it too.
That's right. And a lot of the people always ask, what's the reserve? What's the reserve price? And the agents will say, we don't know. And it's sometimes very true that they don't know what the price is because, on the day.
The vendor can change their mind.
Yeah, yeah.
But if a property goes to auction, the vendor, the person that owns the property, they know what they want to get,
Yep.
and they communicate that to the real estate agents.
Yep.
But are you saying that the real estate agents don't communicate that to buyers? Is that a common practice?
Yeah, or they
So
don't.
if I turn up to an auction and I'm talking to the real estate agent, I want to know what the reserve is. Is he not going to tell me?
No, it's not in the best interest of the owner for them to tell them that.
Okay, so
Because they're hoping to get more.
this is one of those tips and tricks that people need to know, that this is not going to be afforded to you. This information is not going to be afforded to you.
Occasionally at auction, during the auction, they'll say it's on the market, which means it's hit the reserve.
Right.
And they sometimes do that to just squeeze out a few more dollars because people may stop bidding thinking, well, I've got the price, I'm going to win it. But if it's in the market, they won't say it's on the market. And if they've on the market, but they think the auction's slowing down and people are giving up, it's on the market, I might put another bid in because I might get it.
Okay.
So
on the market means it's ready
It's
to
hit
sell.
reserve.
It's hit
Yeah.
the reserve.
Hit
Yep.
reserve, and we're going to, and whoever
It will
bids
sell
over
under
the
the
reserve,
hammer.
it will
Yeah.
sell.
Yeah, correct.
It will sell.
Yeah.
and generally they'll advertise it. They don't have to, but
Yeah.
they generally will, depending on how the auction's going.
Correct.
When it slows down, they definitely advertise it.
Yeah. So then, to answer your question, when it's passed in, that just means that the bids or the highest bidder doesn't hit the reserve.
Okay.
On that auction day.
So what happens after that?
So the highest bidder then gets the opportunity to then further negotiate with the vendor, and at that point in time, you have to be the highest bidder to have the first rights to negotiate.
Right. So I'm going to sit down with a real estate agent
Yep.
and go, where do we need to be?
It's almost come back to a private sale.
Yeah.
That's right.
Yeah. So it's gone through the auction process into the private sale. I've got the highest bid. I have the right, the first right. If I pass that in, does the next guy gets a
I
chance?
think the agents will jump on the phone
That's
and ring
right.
all the other
Yeah.
bidders.
Yeah.
So- And you'll find that there are, once a property's passed in, people stick around.
Of course.
So,
Yeah.
In case, but then that's the thing where you gotta understand is more likely whoever's in there negotiating, they've only walked out because the vendor wants more.
Of course.
So-
yeah.
so-
and they just can't meet them. They
Yeah,
just
that's
they
right.
can't come
Yeah,
to.
they can't come
you
to
know,
terms. So if you weren't the highest bidder, then unless you change your mind and you really want the property, then you're likely having.
Yeah, or the vendor comes down, buyer comes
Yeah,
up,
yeah.
and you
Yeah.
might
Could
happen.
meet in the middle.
Yeah, exactly.
it could happen.
Like a normal private sale.
Yeah, that's right. Yeah,
Effectively.
yeah. I was lucky enough to go with one of my clients, and he was bidding at an auction just as actually during as about a year and a half ago now, and it was during the time where things weren't clearing, so vendors were still expecting prices of COVID,
Yeah.
post-COVID, and they needed to sell because they were closing up on their chapter of their lives to downsize and move further away. And I think the bid was sitting at, their reserve was sitting at 1.25. The highest bid went up to 1.18, and that was my client. And I was fortunate enough to actually go with him into the room. So we ended up going inside the house. We sat downstairs, the vendors were upstairs, and got the agent running up and down the stairs, negotiating with us.
almost
they love
fucking
it. They love
comical,
it.
isn't
They
it?
love it.
Hey, their
Yeah.
little, their own little sideshow.
Their little sideshow,
Fucking hell.
and nerve wracking. And I was there to support, obviously, my client there, and he was looking at me. He was already 50 grand above budget, so we're really deciding, all right, where can we grab, where can we look at that? And we, fortunately enough, we had a backup lender that was going to give him a little bit more. Yeah, he was
Okay.
going to pay a little bit more in interest rate, but we mapped out that in a year and a half he's going to get a pay rise. His wife was going to go full time, so we could look at refinancing him,
Yeah.
get him back into a better rate afterwards. But at that point in time, we pushed a little bit. We made it. I think we made it done at 1.2 mil, so it was good. We got the agent to get the vendors down, and then simultaneously we tried to push it a little bit up.
Yeah,
so
yeah.
we all worked together to get this done. And a year and a half later, he's done what he needed to be done, and now he's been able to refinance and bring that down. And that property now is worth 1.28, so it's gone upwards. So if he had to wait, and let's say we had to go to a bank that wasn't the best rate, so he had to pay about 0.5% more. So that's about on his loan, it was close to about maybe $4,000 or so a year extra. But we're now at a place where he is able to refinance back to the loan, and he's been able to make 80 grand just because he made the decision that day to buy that property.
Well, so that's a prime example of what you guys do and how you do it, which is amazing. Because my next question was who is helping these people in these auction scenarios when they've got nothing else? Oh, we're talking about advocates.
So your point about they're coming up to them and asking, they're a little bit conflicted because they're on the vendor side trying to get the price up.
Of course.
But you're saying who's helping the person on their own, unless they're brokers with them or a buyer's advocates with them, they're up against all these professionals.
Yeah, which is intimidating, and you can end up paying 200 grand too much.
Yeah, that's right.
Which, as you say, per month or per year is a lot of money. But that prime example that you had is the property price went up and basically covered that buffer.
Yeah.
So sometimes it doesn't always happen that way.
Yeah, that's right. Yeah, that's right. That's right.
But having guys like you there to go, right, well, we've got another avenue we can go down, and it's a slightly different road, but it's going to get us to the same point.
That's right.
And you're going to get your home. You're going to get the home that you
Correct.
want,
Yeah,
which is
yeah.
great. So I mean, obviously that's the reason why we keep bringing you guys back, because it's information like that our listeners want to know.
Yeah.
And it's just a matter of picking up the phone, asking, or going to the seminars and just educating yourself.
Or being comfortable in going. So I'm trying to tell before Nick's seminars, I was just saying, just go along to any auction, just get familiar how it works, be comfortable with bidding, understand what's going to happen on the day when you really find a property you do like, and rather than being so nervous you're not even going to bid or you're going to bid badly, at least you're sort of somewhat prepared. And this is another level of a presentation you could watch, or a buyer's advocate, so that someone else does it for you, who's a professional.
Yep.
The seller's advocate is the agent, and the buyer's advocate is your representative. So then it evens up that the two professionals talking to each other.
Yeah.
Well, as we said, it's one of the biggest financial decisions you're going to make in your life.
That's right.
Isn't it?
Yeah, that's right.
So it just makes perfect sense to just be prepared. So if I'm not buying at auction, the other option is a private sale, which is what we discussed. Basically, it's you, the real estate agent, and the owner. That's how it works.
Yeah. Well, you're talking more with the real estate agent with all transactions, and generally through and each agent does it differently. They get you to put your best foot forward, and that's all. It's one of their tactics that they're just going to get you. So you won't know
But
what.
you
price-
don't
So they're
up
just saying
against-
show your cards.
Show your cards.
And if you're not smart enough, you're going to show the card, your last card.
Yeah.
Which is the biggest amount of money,
Yeah, yeah.
isn't it? If
Yeah.
you obviously got to start at a point,
Yeah.
and it's the same with an auction. You've got a starting point, and then you know where your end point is, and you've got this parameter to work within, based on what your borrowing capacity is. But this private sale, people are just going, that's it. Yeah.
And then there's a doubt in your mind. You make your offer and they accept it. Oh, maybe I went too high. You know, whereas auction is a bit more.
Yeah.
I had to go there.
Yeah.
Otherwise I
Yeah,
would've got it.
exactly.
Yeah.
Exactly. So if you're buying a property, would you go to an auction?
Yeah, I got no problem going. But
Yeah.
I'm getting a buyer's advocate. I don't want to jump in front of the crowd and stick my hand up. And I've had a buyer's advocate buy for me, and he's done the crazy things to portray confidence and to scare other bidders.
Yeah.
And
And it worked?
I think it worked.
Yeah.
Hard to know, but unless you're that type of person that's willing to, you got that personality to be strong and bold and confident, then get a professional in to help. In my opinion.
Yeah, it makes perfect sense. Makes perfect.
When you're looking at prices now, over $1 million to spend 10 grand on a buyer's advocate could save you 30.
Well, that was going to be my next question. What a buyer's advocate? What do they charge? Is it's a percentage
some are a
rate?
percentage, some are flat fee.
flat
But
fee.
I'd say in the range of 8 to 20 is the norm. That sort of range.
8 to 20 grand
Yeah,
on the sale price.
but they could be bidding at 5 or 6 properties, 10 properties. Who knows?
Okay.
And there's different level of services, so they can go out and source the property. So you give them a menu of what you want,
Yeah.
effectively, and
Yeah.
then they'll go out and find some properties for you, and then they can either guide you through the auction process, they can bid for you there. So
Or they could bid at private
different
sale,
serv-
bid at auction.
That's right.
Do we both agree that they're good to have?
Oh, I do.
Yeah.
Yeah. There's a lot of information, and we've got seminars out now, and there's probably a lot more of what we're doing as well, just to give some confidence.
I think they're becoming more common. Buyers
Yeah, that's
advocates.
right. Yeah. And so for people that are time poor, they've got their own things that they've got to deal with. They've got their career that they want to focus on. They don't have time to go sit down in seminars and you really understand this crux.
Of course.
They don't care about the DIY. Yeah, it's definitely better.
But
to get something.
a first home buyer is not necessarily going to want to get an advocate involved. Is that correct?
it is a cost involved to it. So
Of
that's
course,
why,
that's what I'm
yeah,
saying. Is like
yeah.
that.
There is some that for first time buyers they're cheaper. I mean, I think I've got one that does it for $4 grand plus GST, so it's about 4.5.
Okay, that's that seems reasonable.
Yeah, under a certain price, I think under 600.
Yeah,
But generally, they're the people who need it the most because they're less informed.
of course.
And
Yeah,
they're
that's right.
picking the wrong properties or,
Yeah.
or getting too emotionally involved. And the buyer's advocate, if they're a good one, won't just be a transactional. They'll educate them and push them away from bad properties and steer them towards better ones or better areas.
Yep.
Or ones that have better growth potential.
Well, so yeah, it's all about being educated and doing your research and just asking. Just
Well, I remember saying to my especially first-time buyers is get out there first. Don't just purely get an advocate because sometimes it's hard to tell someone what you want when you don't know.
Yeah.
So get out there, start looking, because often the first houses you always fall in love with. But yeah, look at a few and then get the pros in.
Yeah,
if,
yeah,
If you
that-
can't do it, or if you don't like it.
it's the old I want, isn't it? It's
Yeah,
horrible. It's fucking terrible.
Yeah.
It's terrible.
Yeah, but yeah, you definitely find home buyers, like you were saying, that they get emotionally invested into it. But generally, with an auction process, if you're competing against someone else, then it just shows that that particular property has demand. So eventually, when you end up selling your place, you'll get the same type of demand as long as you take care of it.
Yeah.
You'll get the same type of
Yeah,
demand.
yeah, yeah.
too.
Well, it's
So it makes sense.
it's that quality of
Yep.
of product on the market.
That's right.
Yeah, so that's a good reflection of why they're doing an auction, why it's on the market at auction. You know, and as we've said, be prepared. Be prepared. You know, otherwise you might just be disappointed.
That's right.
Or searching for a long time.
Yeah.
Well, yeah, because as I said, it can be
That's-
it
that's
can be pretty
draining.
Yeah.
it can be
That is a
pretty
draining one.
daunting and
Yeah.
and yeah, it can be soul sucking. You know,
He does use a term on the night. I can't remember what it's called. Something fatigue, buyer fatigue, or
yeah,
eye
buy fatigue. Yeah, that's right.
Yeah.
Where you get, I know when I bought my first house in Melbourne, I was about 6 months in that first campaign, and then I gave up because the way they're underquoting and all that. So that buyer fatigue is a factor. Of
yeah, yeah,
Yeah.
yeah.
Yeah. If you can imagine you spending all your weekends going and trying all these properties.
Well, this is the same for the renters market as well too, because
Yeah,
I've just gone
yeah.
through this process recently, moving from St Kilda to down to Mordialloc, And it is fucking tiring. It is tiring, and it's just soul sucking. You know, going through property after property, and it's like, well, we didn't get the property. Why didn't we get the property? I mean, look at it. Look at us on paper. Why wouldn't we get the property? And there's no reason why. There's never a reason given why you didn't get the property.
Yeah.
It's like, what's wrong with us? Why can't we get it? You know. Yeah. And after 4 or 6 goes, you know,
You're over it.
oh, my wife would go, we're going to have a look at another property, and I go, fucking all right. This property that we got, I walked out, said, whatever, put a bid on.
Yeah, that's right.
You know?
Yeah.
And the thing is,
If you're happy, I'm happy.
well, see, the thing is that we paid what they advertised that property for per week. These other properties, the way real estate agents are working now, they've got an online platform where you put all your information in there, and then they go, what would you recommend, or what do you suggest you wanted to pay for it? So which is technically illegal because they're bumping up the price. So we were going, because we had a dog, you know, these are dog friendly places, but it's like we were bidding $100 a week up and above what they were asking.
Okay. Yep.
And we still didn't get it. And then the property that we got, we just said whatever the price is, and that's what we got it at, which was, as I said, it's frustrating. It was really frustrating. I don't want to go through that again for a long, long time.
Yeah.
Well, I think it's similar to buying, or maybe worse.
Yeah.
Oh,
Yeah,
of
that's
course, because you just invested it. You've got your whole existence invested in it, and it can be just heartbreaking, you know.
Yeah.
And it's like,
What's your time worth?
Well,
Yeah.
so we were
that's
talking
right.
about not being prepared and then settling for a property that you may not want. I've just shown you an example of renting a property and ending up in a property that really it's just whatever.
Yeah,
it's
yeah.
just a property. It's not a nicer property. It's not the property that I wanted. The ones that I wanted, I didn't get. And you just get invested in it, and you get disappointed. And it's just like, for fuck's sake, you know.
Yeah,
and that's going on. You imagine people with families of 3 or 4 kids or whatever.
Oh, yeah.
And the rental market is just it's just fucked.
Yeah.
It's fucked, and it's crazy, and it's just terrible. It's terrible. I would hate to, as I say, I hate to be at a disadvantage trying to find a property, a rental property.
Was the demand really high on the ones that you loved?
We
Is
were
that what
going
happened?
to places, and there was 30 people turn up.
Yeah, right.
That's insane. This is Bayside.
Yeah, Bayside, yeah.
And yeah, it was just great. And we'd see the same people going to the same properties, you know, and it
With their
was
dogs.
just, yeah. It would, as I said, it was it was a shitty experience that I never want to go through again, you know, and that was the rent. And as we talked about with buying a property, you know, people just get, they get, the wife wants it, and then you can see your car parked in the drive, and you can, you know, you go, I'm going to make some adjustments to the kitchen. This would be awesome.
Yeah.
You know, and if you're stupid enough to bid over what you've got, and you eventually get it, that's a downside.
Yeah.
But if you're not prepared, as you say, with an auction, and you're not playing it the right way, you're going to miss out on it.
That's
and
right.
then
That's
the process continues. It continues and continues.
Correct.
So yeah, it's a frustrating situation for anybody and everybody involved.
Yeah, and to add to that, you know, if it drags on, you may give up, and then you've got 2-3 years that you haven't bought anything, and the prices are
2-3 years out of the market. Exactly.
10% more.
Yeah, exactly.
And try to save up.
Well, as
again.
we said, there's no wrong time to get in the market, is there? You know, you've just got to get in there. But
Get a good property.
yeah, well, that's the thing is like, so the information that we're supplying, the information that you supply to your clients, it's all about finding the right property, working within your constraints of your income, and making sure that that at the end of the day they get what they want, how they want, and they're not under stress with regards to payments. They're not overextended.
Yeah, a lot of factors there, but they're all correct.
They were the main ones. As you say, being overextended. That 20 or 30 grand at an auction that you didn't account for is gonna be stressful and add to the you're gonna have to cut something out in the rest of your life. So it's a fine balance between.
That's right.
As you say, like being by like the Joneses and having the house with a white picket fence but it's all about affordability, isn't it? You know, and you can't have 4 cars that are all leased or on finance and a whole lot of credit cards. You know,
your borrowing capacity
it's
goes
fucking
down.
what you can imagine. You can imagine
can't
all
go
these
alone.
people that are just trying to keep up with the Joneses and are just in so much debt, but they look good. You know, the wife's got the pearls and the Mercedes, and Yeah, you know what I'm talking
Oh,
about. don't you?
we see the clients, we
You
see
know
the
what
credit
you-
reports, we
Yeah.
see that some clients are great with money and some are not so great.
Yeah. This podcast is brought to you in part by Buckfast. What is Buckfast, you ask? Well, let me tell you. It's better known as Bucky, and it's an internationally enjoyed, unique tasting tonic wine. It's equally rich in heritage as it is in taste. It packs a punch from 15% alcohol and about the same amount of caffeine as a well-known drink that gives you wings. Buckfast's enjoyment is only rivaled by its versatility from the cooking pot to the wine or cocktail glass. Drink it straight, mix it in a Negroni, or use it as a marinade. Available Australia-wide and distributed by Beeblebrox Beverages. Visit beeblebrox.com.au to find your closest stockist and buckfast.com for cocktail and recipe ideas. Oh, all right. So what have we learned today, guys? What have we learned? What are some of the key points?
Well, we talked about interest rates. You know, try to get ahead to speak to your broker in negotiating and making sure that you're on a competitive rate. It's always advisable to check in with the banks and at least try to negotiate every year. So we talked about that. First home buyers, all the schemes take advantage of all the first home buyers and all the schemes and all the things that it's a big push by the government to really get first home buyers in or first home owners into their property. And that's really helped, and they're doing a lot of initiatives at the moment. So just speak to your broker, to banker, to really get an understanding of those.
Take advantage of them. Yeah.
Yeah.
Well, I think what we've said today is that you guys are pivotal in educating your clients. So you're not just doing loans. You're not just crunching numbers doing loans. You guys do more than just that. You're giving advice. You're giving your clients the information that they need to make good decisions. And as I said, with the auctions and the seminars and that, it's about making sure that your clients have all the information required for them to make a purchasing decision.
It's quite complex, and like when we think about our job, the market share brokers are doing loans is up to about 76%. It's going up every year. And you're sort of thinking about AI and, well, hang on, I could just go online and find the best rate. But there's so many parts to it. And then the education, the guidance and the process is part of it. And I did a loan last week for a mate of mine up in Gosford, and he just got his loan approved. He's out buying investment property. And I said to him, I've done the easy part, get the finance. You've got the hard bit now, find the property.
Yeah.
So, yeah, it's just that guidance along the way to get to that stage. And then, these seminars that Nick's doing and knowing what's next is quite hard. And that's why we get a lot of calls and our clients returning back.
Well, that's the reason why we keep you guys coming back too. Episode number 4, Let's Make Finance Fun. Thank you very much for your time today, guys. We've got some contact details for both of you up on the screen at the moment. So there's a QR code. Get in touch with you guys if you're Melbourne, even if you're not Melbourne based.
That's right.
Just give us a call, QR code, and just start a discussion.
Free to chat.
Free to chat.
That's right.
Always free to chat.
Yeah.
Well, once again, lads, thank you very much. I really appreciate it. We're going to get you back soon. It's been a year in between drinks. I think
the setup's getting better and better.
You like it? It's more comfortable,
What are
isn't
you
it?
gonna do next time?
Yeah,
step it up.
The volume of alcohol is getting more expensive.
I love the segment too.
Oh, of course, that's great. That's great. Thank you for the.
Thanks for having us.
Mate, it's been a real pleasure. Thank you very much. To our listeners and that, make sure that you like and subscribe. Make sure that you get in touch with you guys at Rate One if you need financing, you want some information. Just do it. Love it.
Thank you.
Thanks, guys. That's a wrap, Matt.
Yeah, thank you for tuning in and for your time. You know the vibe, I'm steady living until I die. It's a lewd state of mind and we showed you that. Keep it authentic and real, I hope you coming back. Hey, make sure that you subscribe, cause we got it popping all the time and it's going down. If you wanna elevate, wanna live a better life, keep it locked here. You know it's a lewd state of mind, let's go.